Hello everybody, it's me the Boss Hog, and today, a little bit later than usual, I'd like to walk through my buys and sells and dividends as of the week ending the 22nd of October. A bit late just because I had some technical problems with my sound trying a new setup this week, and also our daughter's been sick, so that also meant me and my wife have been having funny sleeping patterns. Anyway, without further ado, let's get on with it. Alright, so I'm actually in the bedroom. My wife's fallen asleep on the sofa, so the weird lighting here you have to forgive. I think I look weirdly angelic actually, so take from that what you will. In terms of last week, I found it weirdly mentally taxing. The FX movements definitely weren't helpful, and I think it was kind of where I have my own spreadsheet, I get to see the stock movements in real time from both their trading hours, right, so standard stuff, as well as the FX movements, which are, like open, a lot more than the markets do. So, on a few days before the US markets had even opened, I was already 300 quid down on my US shares, so it just kind of sucked. So that was a little bit depressing. And also, although I felt like I made the right moves in terms of my sales and buys this week, I didn't really time them as well as I could. If I'd have like held on to things a day longer or sold them a day earlier, I would have made like another, low £100 kind of thing. So although it was minus 29. I felt like this week I probably should have just had the psychological win of a profitable week. But anyway, more or less flat for the week. You can see here some of the big call outs. National Express, which is now my largest stock, was down 5%. Now, I would say because I added quite a lot of shares this week, my individual slide was more like 3.5%. But yeah, definitely a pullback there. Polymetal plus 6%. I'm now actually green on poly. This is my gold and silver hedge, so that's really great. Hollywood Bowl is also something we're going to be talking about in just a second, but they had a bit of a pullback based on basically COVID worries in the UK, as did WH Smith there, and sandwiching those is United Health, which was up 5%. So most of these are actually going to mention in a bit more detail, so I won't dwell any further there. Extremely active this week in terms of my trading. I actually traded 12% of my portfolio value in a single week, so I mean, to me that's proper trading. And really, it was just to free up some money for COVID-related UK-focused stock, specifically in travel and retail. For me, I mean, I think I actually like value investing. I find it fun trying to identify opportunities before anyone else does. It's like, diamond in the rough type stuff a lot of the time. So, like some of my shares that I bought this week, maybe some people view them as risky, but I actually don't. I think even though they might have some impact from COVID worries and or winter lockdowns, etc. None of them have any existential worries. I'd put them at like 4 out of 5 on the risk scale at the most. And actually, I think I picked up some really great bargains, essentially. Added £400 capital this week, as expected. And no dividends this week, but again, as expected. If you follow my video last week, you'll be aware that October is actually my best month since I started 10 months ago, so that felt really good. But I also have no more dividends expected until the end of the month, bar one, which is going to be £10 next week, so nothing especially material. So it is what it is, right? So not too much interesting there in terms of dividends or capital, but it's about to get a lot more interesting on the buy, so let's get to them now. Alright, so more huge movement on National Express this week. Managed to free up 8,500. I nearly have 10,000 shares now in National Express, so it's my largest holding, 22% of my portfolio. I've used the word delighted here just to explain that a little bit. I believe that the shares are worth like 340, somewhere around there. So to be able to pick this up at 221 as an average for me feels really good. I am a few percent down on this. My current average is 234. But again, I'm very relaxed about that. And again, although kind of it's overly seen, in my opinion, as a COVID stock, its earnings, revenues, all moving in the right direction. They had an investor pack on the 18th as well, which I enjoyed reading. It kind of was actually more optimistic than I was expecting in a few ways. One of those ways is that they expect 2022 earnings to return to 2019 levels when the shares were trading at above 400, so that would be pretty magic. There has been some dilution since then, to be clear, something like 15%. So, I can take my sort of 420 minus 15%, and they're actually slightly more optimistic than potentially than me, assuming it would still trade on a similar earnings multiple, etc. So fine, but similar ballpark, that made me feel really good. Also, actually, a bit of a surprise to me was the fact that they want to reinstate their dividend next year, which is a year earlier than I was expecting, so that would be good. I don't really need a huge dividend, but I think their earnings and debt levels before they pay dividends are sensible. So, if they hit those, then I'll happily take a few pence. 1% dividend would be nice, considering I consider this a growth and value at play rather than a dividend play. So I'd feel grateful for any dividend, really. Also, as well, some of their case studies and turnarounds in places like Spain, Morocco, some of the American cities as well, just makes me feel really a lot more confident about a possible Stagecoach acquisition than I was feeling previously. So that just made me feel really, again, confident and happy, and actually delighted to be to have such a huge stake in what I consider as a share that's 50% undervalued. So I'm just going to now ride this out for 0 to 36 months and go from there. Also, likewise, I'm happy to be rebuying Hollywood Bowl. At one stage, and I guess this must be like 6 months ago, this is my largest holding, and it's now like 7th, just to show you how much my portfolio has changed over those 7 months. At my peak, I had 2,500. I sold 500 at 239, but now and then I sat on the 2,000 effectively, and it's gone sideways. Now I've started to buy again, and I bought 590 shares, so a new all-time high in terms of my number of shares there. And I was buying these at 227. Again, Hollywood Bowl had a trading update a couple of weeks ago. They could have called things out a little bit more clearly, but I think I was able to fill in the gaps well enough from what they did call out, and it made me comfortable buying the shares under 235 with a kind of 275 to 280 12-month target. So again, I'm starting to buy that as well. It does have some COVID exposure, but again, it only needs to be open about 6 months of the year to be profitable for the full year. And I'm really confident with their direction of travel and etc. So again, really happy to be buying this on a, whilst not quite the same sort of discount that I believe National Express has. To me, this is still a great buying opportunity with sufficient margin of safety and all the rest of that good stuff. Not a COVID stock, but I continue to average down on Gamma. This is my main telco play at the moment. I really like Gamma. I work in telecoms myself, and I started a new job quite recently, and I've been chatting with various people. The amount of times Gamma comes up and is favorably mentioned is just unbelievable. It's like where we, my employer, and many other employers strive to be. Everything that they do scales very nicely. They're really building for the future and thinking of how they can leverage value from their network. It's just a very smart, well-run business. None of the legacy crap either that you get with a lot of larger telcos, and I view Gamma basically as a growth and dividend growth play for a long period of time. My original target here was under £21, so to be able to buy some more shares at 18.29 feels really good. I am still down a reasonable amount on this. I think my average is something like 19.50, but again, I'm going to continue averaging down. I think in the long term, I'm getting good value here basically, so I feel pretty good about this as well. And last but not least here is WH Smith. I've traded these guys quite a few times before. I think this is my 3rd time back in there. I consider anything under 16 for WH Smith a perfectly good buy, honestly, and even 16.50 looks pretty good. Now this has been impacted by COVID. They don't have any existential problems, but all of their higher margin stuff is in airports and railways, so obviously less travel through those places, less earnings, and it does have an impact. But again, this share was trading above £24 at its peak. It doesn't deserve to be there yet, to be super clear, but for me this is like a 19.50 kind of value at the moment, so I do need a little bit of safety for this, but not that much, because again I think it's best in class, and I'm quite happy to either swing trade this or hold it for the medium term, basically depending on if there's any more opportunities out there. So again, here I was able to 3x my holding, buying at 15.60, which I just think again is 25% undervalued, so comfortable margin of safety there. And in doing so, I got my average down to 15.70, so that feels again really good. So I'm pretty happy with my buys this week. Obviously, it's still top heavy with Hollywood Express and to a lesser degree Hollywood Bowl. National Express and to a lesser degree Hollywood Bowl. But really happy with these buys. I think I'm basically just buying solid companies, that are in various stages of their turnaround journey or growth journey for really good prices. So again, I'm just at the moment like putting my money where my mouth is, and we go from there. Obviously, though, I only put in £400 capital this week, so I did have to sell some shares. So let's look at what I had to sell to free up this kind of money. Alright, so first off, I sold out of almost all of my share of Evraz. I think I got an okay price here. I wanted to talk about it though, because like a few weeks ago I did do a video comparing Evraz to Rio, and why I believe Evraz is better, and I still do believe that, by the way. But since then, the iron ore price has been under a lot of pressure. Now, Everest has held up better than things like Rio or Vale. There's a few reasons for that, but primarily it's linked to sort of it has 20% in coking coal, which has been on a bit of a tear. It doesn't have as many of the geopolitical issues at the moment that, the Rio mines in Australia or the mines in Brazil for Vale have. And it's just basically been able to keep up production. It hasn't had as many production pauses for things like staffing or COVID lockdowns or etc. etc. But still, since my video comparing Everest with Rio, iron ore price has come down. So at the time, I think I said that Everest was worth 720. It's probably worth more like 670 now. So being able to sell out, considering they're not going to have a divvy for a while, which is certainly one of the main reasons to hold this stock, actually felt kind of okay. I would like to 650, as much as possible. But I don't think 632 is a terrible exit, and I've made solid money over the last 10 months with Everest, so I feel fine on that actually. Anything under, for me, 575 for Everest is a clear buy. Assuming iron ore is reasonably in line where it is now. Anything under £6, I'd probably start buying again and get really excited under 575, just to be clear. Fever Tree, again, I left one of my shares. I like to leave one share just because I find it easier to monitor, to be honest with you. I know you can set up alerts and all the rest of it, but I like the visuals, and maybe I'm a dinosaur in that way, but it's how I like to work. So again, I've just got one Fever Tree share left here. This was one of the shares that I didn't feel like I optimized the value on, because during the week it went up to like 25.5 quid. But then in fairness, by the end of the week it was back down to 24.5. It tried to have a breakout basically. For me, I think it's worth 24.50 at the moment, but you could easily make a bull case for this. And again, I've done a video on Fever Tree before, maybe even as high as 28 if you really wanted to extrapolate and be really bullish on growth and etc. etc. But for me right now, and an opportunity to free up some money from both Everest and Fever Tree, both of that money went into National Express basically. So yeah, to me, even if you take the argument that Fever Tree is 10% undervalued, my opinion is it's got nothing on National Express. And so I freed up the money. Again, took some good profit, to be honest, and don't really have too many regrets. For me, anything under £23 for Fever Tree is a buy, and anything less than that, I just think it's such a good quality company that you'd want it in your portfolio. So, if it goes down to 21 again, you should throw as much. I will throw as much money at it as I can muster, so that will feel fine as well. And again, something else I've been trading quite a lot is Huntington Bank shares. I sold out at 16.30. So 12% profit, and I've also made money on a previous trade as well, actually a bigger percentage on the previous trade just because I was in there at like the 14s. For me, I believe this share is worth about 17.20. It's now a solid S&P 500 bank, right, following its acquisition. I think it's in the top 300, it's around that kind of mid area in the S&P 500. And in general, I really like its digital movements, its engagements, its mix of consumer and business banking. And actually, I've been on a couple of their earning calls. I think they're very solid. They're like a smallish company by American regional bank standards. But I just get the impression it's a very good, well-run business. So I would happily buy into HBAN again. But again, here I was freeing up money for both WH Smith and Hollywood Bowl, where I just feel like there's more opportunity for a return. So again, no regrets for that either. And last but not least, I trimmed some of my Huntsman. At one stage, this was my first largest share. It still is my second largest holding behind National Express, but now some way behind it. A profit took. I had a $32 buy price for this long before the activist shareholder, came in with an 8% purchase. It's been at 32 now for a little while. It seems roughly where it's stabilized between 32 and 33. I am actually a little bit tempted to sell down some more Huntsman, but I really want to see what the activist investor is proposing in terms of improvements. Maybe there's some cost reductions or some further simplification in the business, or maybe some changes to things like dividend growth strategy that would put it on more investors' radars. Unfortunately, he is not obligated to publish until December, so again, I might take a bit more profit here. Because for me, I think a lot of the short-term benefit of Huntsman is now caught up with events. And at the moment I'm sitting on like a $3,000 unrealized profit, which is no joke. And so I'm a little bit tempted. But again, here I decided to trim down. So now I've got 600 shares remaining in Huntsman. And this was, I think my Huntsman shares actually went almost exclusively onto WH Smith. And again, for me, it was just a case of Huntsman, I think, is more or less up to date in terms of fair value. And I got something like 32.50 here, so fine. and whereas WA Smith is miles behind. So a lot of my movements this week actually were trimming or selling down shares that actually I like. I like Evraz, like Fever Tree, I like HBAN, and I definitely like Huntsman. But for me, it was just a case of a lot of them are near-ish to where I believe their value is, and what I was buying was just significantly undervalued, notably National Express, of course. But again, I would say that the others as well were materially undervalued. So from that perspective, in the kind of medium to long term, if I think of something like 6 to 36 months, I'm really confident in the movements here, and okay, like I'm trying not to beat myself too much about, crystal ball, the fact I've mistimed a few trades and didn't get 100 to 150 quid immediate profit, maximized. Okay, it's not the end of the world, because again, if my theory holds true that National Express is 50% undervalued, then great, I'm going to be making like 10 grand from that over the next couple of years. So again, this week is all about me having some confidence, I think, in sort of shares that most people aren't really looking at, and that's okay, because again, I think that I'm confident with my due diligence, basically, in my research, and I feel confidence in myself, I suppose, that I think these are good entries. So yeah, trying to look on the good side. Hopefully, in a few months' time, I feel really smug, like I did in September when Huntsman finally came good after a few months sitting on them as well. So we'll just go from there, the nature of investing. Anyway, any questions? Again, I try and do my best to be as transparent as possible, so please feel free to put them below. Otherwise, like, comment, subscribe if you've got any value from this at all. Otherwise, I've been the Boss Hog. Thank you very much for watching, and good luck with your investing. Bye for now, guys.